You must separate the signal from the noise. In our world of charting, stock investing, and trading, the noise is all of the things you hear in the media, the things that are out there to confuse you, to make you wonder what's really going on. The signal are the stock charts. They show you what's happening in real time and what's happened in the past. You need to pay attention to the signal, not the noise, if you want to be successful in life. That is figuring out reality versus illusion. And in the marketplace, figuring out where the stock, the ETF, the investment is going. That is what we do here at chartingwealth.com. We help you pull the signal from the noise, pull reality out of fantasy or the mixture of both. That's what we're doing here every day. That's why when you look at our charts, they make sense. I have you guys all the time write me and say, for the first time, I actually understand what somebody's saying. They're not wrapping it all up in a lot of confusion. We break down reality. Now, let's jump into it. What do we see going on in the market? The S&P 500 down for the day. The NASDAQ 100 up for the day. Bonds up for the day. Gold down. Things are going just as we want them. Now, let's look at the S&P 500. It's barely pushing above where it was in the prior week so far this week. Down day, about 1/4%. Price percent oscillator not going up at the same stronger angle it had been, but still going up nicely. In other words, there's still possibility for upward movement. Derivative oscillator losing some momentum. We go from the weekly to the 2-day chart. And of course, what we see here is we see the latest 2-day candle pushing just above where it had been before. Now that that's finished drawing, we can connect 3 decent candles. And again, price movement is above the 2-day trend line, well above the weekly. We see the price percent oscillator heading down, derivative oscillator losing momentum. We go from the 2-day to the 4-hour. And this is where we just can't get a break. It just won't cross over going up. What does that tell you? There's not enough energy for us to jump into an up trade. If you would have tried to have done that anywhere along the way, it would have topped out and then moved over to crush you. So we see, of course, that, and we just not had a jumping in point. That's the point. Look like we might get close. Remember, we use the 4-hour chart as our trigger chart to jump into a trade. Once we jump in, we then back off to our 2-day and weekly charts. We've not had the trigger. Derivative oscillators now turned negative in the afternoon. Price percent oscillator heading decidedly down. Now we're still set that if the 4-hour chart had a huge up, say on Thursday morning, might be able to jump in the afternoon, but we're right there at the top of the Bollinger Band, all sorts of stuff. So we'll continue to watch, see what we see. Don't have a trade on the S&P at this point as far as a jumping in point goes on the 4-hour chart. Now we go from the S&P 500 to the NASDAQ 100. Different picture, up 0.35%. Price movements well above that weekly trend line, continuing to arc up. Derivative oscillator gaining upward momentum. Price percent oscillator heading up quite nicely. We look at the 2-day chart. That latest 2-day candle bounding above the prior one, which is what we like to see. Price percent oscillator heading up. Derivative oscillator gaining upward momentum. We look at that 4-hour chart. What do we see there? Now look, it's negative. Does that mean we're not in the trade? No. We got in back when we had the crossover in the afternoon on Monday the 1st. And what has it done for us? It's continued to track up quite nicely and continues bounded up in the morning, bit of a pullback in the afternoon, hanging around that Bollinger Band at this point. Again, it had tightened up on us a considerable bit as the market moved sideways. Bollinger Bands, again, represent volatility. When they get tighter, when they bottleneck on you, as opposed to being spread out, means volatility is reducing. If you look back when the market was just spiking up there at the beginning of April, that's when the Bollinger Bands really spread apart. As things slid sideways, they tightened up. So your Bollinger Bands show you volatility. The further apart they are, the more volatility, the more price movement. So looks like we could be getting over to another crossover going up on the cues on that 4-hour chart. Derivative oscillator gaining upward momentum. And again, things are looking quite nice. Continue to keep your eye on the prize. If you jumped into the Qs trade, it has done quite well for you. You can take your profit at any point. We do want to note that when we go back, in fact, it's easier to go back in time on a bigger chart. We'll do that. And when we look at our weekly chart on the Qs, moving up a little slowly, and we see where we topped out last, our highest point, 187.52. We look at 187.93. So again, things are moving up quite nicely. How high will it go? Don't know there. We look at that weekly chart and we can see how volatility is really spread out, giving us a lot more room to move up. So it's beautiful. Keep your eye on things. We'll continue to watch these charts, particularly when it comes to the trade we are in on the Qs. And again, these are practice trades. We're not a stock calling service. We're an education firm. We want you to practice with us. Let's go now to bonds. What do we see happening with TLT 20-year bonds? We have another down week that is forming. We do see that bonds were up for the day a little bit, 0.04%. Getting possibly close to a crossover going down. 2 more days to see if that occurs. If we have what's called a weekly vertical crossover, the last one occurred way back on the 30th of December. Significant price movement up over many weeks, some flat weeks too, but things peaked out all the way back on the 29th of March and have been moving down since then. Haven't crossed over yet. Derivative oscillators still barely positive, so we'll watch and see what we see. We go from the weekly to the 2-day. 2-day continues to march down, strong down candle on the 2-day. And we see the derivative oscillator gaining downward momentum, price percent oscillator heading down. What's up on the 4-hour chart? Of course, it's still decidedly down. Now, until we have a crossover, a weekly vertical crossover on the weekly chart, we don't look at getting in. Remember, we have to have our weekly and our 2-day moving in the same direction. Perhaps we'll have that weekly vertical crossover by the end of the week. We leave bonds now and go to our last chart, gold. Gold down for the day, 0.19%. Now remember, we had that weekly vertical crossover going down in gold back on Friday the 29th of March. The following week, ending the 5th of April, was a down week. Then we sort of had a doji week, not a lot of movement at all in our Heikin-Ashi candlesticks. And then, of course, this week, we've seen an acceleration down, breaking through that 121 mark, closed for the day at 120.28. Again, beautiful. We punched through that ceiling. Derivative oscillator spiking over, going down, price percent oscillator also. We go from the weekly to the 2-day. And of course, this latest 2-day candle, huge down candle. We see the price percent oscillator spiking over, going down, derivative oscillator gaining downward momentum. If you remember, we had gold prices bounce off what ended up being a floor for a while. And I loved what one of you said about hitting on a piece of glass. You may have to hit it with the hammer a few times. You weaken it each time, and finally you will punch through. That is what has happened over the last couple of days, really punching through that, moving down. We had been stopped at the 121 mark, happened about 4 times, and then this last time banged through. Derivative oscillator, of course, and price percent oscillator spiking down. And again, down again for the day. Not a whole lot, 0.19%, but still. Now, what do we see happening as we look at the 4-hour chart? Again, how much lower will gold go? Gold has been hitting somewhere, when you start seeing candles stack up with bottoming points around the 120, let's see, we're sort of around the 120.20. Keep your eye on things. Let's see if it continues to trudge down, hitting the same points over and over, or will it keep spiking down? Sometimes the market just needs to digest those down moves and then move on. Now remember, our crossover was back on the 12th on the 4-hour chart, jumping in point somewhere around the 122, 121.80 mark, something like that, down as low as 120.28. The lowest point in the day with our Heikin-Ashi candlesticks about 120.20. So again, you've got a couple of $1.50, $2 a down movement. That's decent, but again, we want to keep our eye on things because gold, don't know how low gold will go, but things are looking nice on our weekly chart and our 2-day. So continue to keep your eye on things, and we want to see how low gold will go. Folks, that's where we are. Hope you're doing practice trades on gold. That is an inverse in gold and the Qs. That's an up trade in the Qs, the NASDAQ 100. Again, aren't these charts incredible? Don't forget, as we move into warmer and warmer weather, as they say, sell in May and go away, live to trade another day. Summertime trading zone typically gets pretty crappy, but you need to practice all the way through till we get to that beautiful fall-winter trading zone again. The reason the summertime gets crappy is usually because a lot of volume goes out of the market. A lot of the big money leaves the market, and things get a little herky-jerky, which again is difficult to chart, but if you can do it and you need to practice it, it's just going to make you a better investor, trader, as you learn how to follow these charts. And remember, the charts are the signal. The noise is the news that is out there to confuse. So pay attention to the charts. The charts are what it's all about. We love to hear from you. Please feel free to write us, cw@chartingwealth.com. If you want to order our book, it's available. Look in the show notes, either the YouTube channel at chartingwealth.com, iTunes, wherever you listen or watch our podcast, broadcast every day. Make sure that you subscribe on iTunes, subscribe on YouTube, subscribe at our website. Nice thing about subscribing to Charting Wealth at the website is you get all the latest trainings and everything else as they come out. I have a couple already in that I need to upload and get out to you. So if you want to receive those, go ahead and make sure that you subscribe at the website, chartingwealth.com. My friends, we appreciate you. We so appreciate all the kind words we hear from you. We're giving out all this information because it's important. You guys know we are training for game day. And game day is going to be when the market stops or pulled out and things start to crash. There's always a potential crash out there. And when the next one happens, with all the inflation due to money printing, quantitative easing, all that stuff, when that finally hits, things are weak in Europe. Things are weak in China. There's a whole lot of underlying problems in our own economy. We are training for the day when things get really bad. And when they do, we want to make money up until then. And when things get bad, we want to make even more money. How is that? That is through inverse trading. That is through pulling our money out when the market crashes and making money when things go down, when there is blood in the streets and people's hair is on fire and people are throwing themselves out of buildings, which I hope they're not doing. At some point, things are going to get bloody. And when they do get bloody in the market, that is where the smart money knows what to do. And we want you to train with us so that you are part of that smart money. You've got to train every day. 10 minutes is all we ask. If you want to get started now. Watch those training videos at the website, chartingwealth.com. They'll give you the information that you need in order to get a feel for what we do. Make it a point to listen to 2 a week, okay? You can't overload yourself with too much information. It won't stick. 10 minutes a day with us, 2 of those videos every week till you work your way through them. Get yourself a notepad, take down notes, think about things, look stuff up, ask questions, work these charts every day. It will come to you. This is not rocket science. It is charting art. That is what it's all about. If machines and computers could do this, they would be doing all of it. And day trading's getting harder and harder, but following trends like we do, long-term trends, I'll say the bigger the chart, the bigger the money. So stick with us. Follow these big charts. Figure out what's going on. Don't let the news fool you. Let the charts lead you. God bless, my friends. All the best from the whole team here at Charting Wealth World Headquarters.